Welcome back to Stocklabs for another market recap. Just finished first week of August on the 5th, and it was a pretty decent week for markets overall. I mean, started kind of soft, then had a big up day on Wednesday, kind of chopped around. I think kind of just chopped around on Thursday, and then we opened down big on Friday, but basically, at least for the S&P, made it all the way back to more or less unchanged. Uh, Nasdaq was the outperformer for the week, I believe. Let's just get right into it. Yes. Okay. The Qs were up 2%. IWM also up 2%. S&P, like I said, more or less unchanged, up 0.3, and the Dow similarly more or less unchanged, down 0.2. So the more balanced S&P and Dow were kind of flattish. IWM, you know, had a pretty good week for itself, with some risk coming back into the market, and Qs have been outperforming since the Fed raised rates 75 basis points, and sort of the market has interpreted that as that's going to be, and the path we're on is enough to sort of engineer soft landing that will more or less allow rates to stay under control long term, which puts a bit under tech because it's been hit so hard due to expectations that rates are just going to rise like uncontrollably. So if rates are under control, tech is the outperformer, and it's sort of reflecting that in the most recent trend. As far as the mega cap leaders, they had a pretty good week for themselves. Facebook is up 5%, top performer, and then Nvidia and Amazon both up about 4.5%. Were the two other sort of horses. The rest, more or less, Apple was in line with the market. S&P. Google, slight underperformer, I would say, only up 1%. Netflix up 0.8, although Netflix has had a pretty good run off its lows. And Microsoft, 1%, whatever. Tesla was the outlier, down 3% for the week. But as a group, they did pretty well. I mean, this is in line with the NASDAQ, so you can see that the NASDAQ sort of being buoyed by, the biggest of the big tech stocks, and these are the ones that sort of attract the big money because they can, large money cannot just pile into some 10 billion cap company. They have to buy, 500 billion trillion dollar market caps. So pretty good week for the leadership stocks. Breadth from an industry perspective was kind of muted. You see a lot of sectors kind of along this midline here. Basic materials laggards down 2%. Tech up 3%, pretty good. So median tech stock actually outperformed the NASDAQ. And then healthcare, big outperformer, up 6%. This healthcare trade and biotech trade has really turned around in the second half of the year. Since the end of June, start of July. This is really shaping up to be the second half story for markets this year. For subsectors, you can see kind of these healthcare ones are near the very top of the list. We've also got SaaS leading, finally on this leaderboard after not being on it for the longest time. So good week from them. And yeah, I mean, there's a handful that are up over 5%, but nothing crazy. I mean, it's definitely thinner than some of the last couple of rally weeks we had, but that's expected when the indices don't make tremendous progress. And then on the downside, a lot of commodity related, oil and gas specifically type sectors were the losers for the week. Although there aren't many losers overall. So, that's good too, that breadth sort of held in with the market, at least on an industry basis. Um, if we look at breadth from a market cap basis, then we will see 1 to 5 billion caps up 3.3%, solid week from them. 5 to 10 billion up 1.8%, more or less in line with the market. Large caps 10 to 50 billion up 1%, okay, underperformance versus the indices. 50 to 100 billion 1.5% to the upside. I would call that in line. And 100 billion plus flat, up 8 bips. So you sort of see, like, from the 100 billion group, the only ones that were really like pulling the weight for the week were those ones that are I have segmented off in that leadership group, the mega cap text. This Terra Cap group overall did not even keep up with the market, if you took them all together. So maybe that's ominous, maybe not. Remains to be seen. As far as intelligence goes, okay, we have a lot of bullish stuff for this week, and actually, this is probably the most populated this screen has been in several months. Got Ultra Nasdaq, and then big oil, small caps. Okay, I see about half of this list is oil and gas stuff. So it might kind of be a make or break week for oil and gas. If the trend from earlier in the year doesn't reassert itself this week, you probably have to just consider it dead for the rest of the year. So I would really pay attention to that, especially if you're kind of heavily in these trades, then and you haven't reassessed it, or if you're kind of just like clenching your teeth, just holding on to it. You probably really want to reconsider that if this doesn't sort of show you some life this week, the oil and gas trade, that is. Everything else, so Nasdaq or S&P, like we said, and okay, uranium's kind of a one-off, like, weird thing that pops off every once in a while. Ultra short silver's on here. Okay, so maybe the metals will not be that favorable this week. And on the flip side of this, we have, okay, gaming bearish. Okay, bear energy bearish, so it matches up with the other side of the screen. Okay, ultra silver is bearish, so it matches up with the other side of the screen. Ultra short Brazil bearish, so okay, bullish Brazil. I've seen this like a handful of times this year on this, bullish or bearish. We've been getting signals on the Brazilian, like the Brazilian stock market, the Bovespa. So maybe we'll take a look at that early in the week. Okay, nickel bearish, cannabis bearish, which is like an evergreen theme. And okay, gold miners bearish. So silver and gold and nickel bearish this week. That would probably coincide with some sort of dollar rally, which isn't necessarily bearish for the market overall, but would weigh on the metals specifically, since a lot of the themes involved in those are currency related. So a lot to pick from this week. Got to focus on the energy trade to see if it shows any life. Maybe avoid metals this week. And as for the market overall, is rated or bullish. So probably maybe the prevailing trend sort of sticks around, or the prevailing like most recent trend sticks around for a little bit. If we look at quote unquote levels, we are sort of, the market, at least for the S&P, is back up at these sort of May, June highs, where we took a big dump from here before, chopped around, and now have sort of walked back up since the Fed did their rate hike back here. So we'll see. Maybe maybe this is just the range high for the summer, and we sort of spend the next month or two chopping in this range. But um, yeah, otherwise, bulls are going to want to sort of press this trend back higher to quote unquote break it out, and try and maybe get up to here like 4,300 on the S&P, 4,300. What is this, like 4,380, 43, 4,400, somewhere in here is where they'd like to get to. But overall for the market, solid week. We do have coming up a CPI print. So those have been very important to investors because they sort of govern how the Fed is going to behave looking forward. I think the expectation is that inflation, at least the headline number, is starting to come down based on the Fed's policies that they've enacted. We've gotten a couple rate hikes now into it, and people want to see that they're working. So they want to see that headline inflation start to come down. I mean, the Fed isn't going to formally back off until inflation is down to like 2%. Whether they can get it all the way down to 2% over the next, say, year without inducing a hard recession, I mean, this is like sort of the thread the needle kind of approach that they're going for. It remains to be seen if they're going to pull that off. But for now, the market's believing in it. You see the outperformance in the NASDAQ that, rates are going to sort of get back under control. We also have the University of Michigan will publish consumer sentiment. Consumer sentiment from UMich has been basically at all-time lows. Consumers really hurting. They're really frustrated with prices and sort of the stickiness of the prices. And even though a lot of gas has come down, grocery prices have maybe they've stabilized a little bit, but there's a time factor as well with these sentiment numbers. It's like if, for instance, I don't know, chicken goes from like $10 a pack to $15 a pack, even though it doesn't go from 15 to 20, the sentiment can get worse while it's sitting at 15 just for how long it stays there, if that makes any sense. So be watching UMich. I mean, UMich does not print all-time lows like it does now outside of recessions. So you can use that as a data point to say you're in a recession right now. But whether it's going to be a deep recession, that's sort of like the game that's being played. We have all these considerations, the Fed, fiscal policy, all of it. So those things aside, solid week for the market this past week. Bulls are going to want to press this a little higher, trying to just continue the trend. If it all falls apart, then maybe new year-to-date lows are in the cards again, which would kind of negate a lot of these theses that have been put out that there's going to be a soft landing, the rates are under control and all of that. But those are things to just consider over time. As for next week, you probably just want to press the most recent trend, the existing trend. I don't think the earnings calendar has anything too special on it for this week, but I might be wrong. I mean, we are in earnings season. I just didn't look. I just assumed that since all the big techs have sort of reported and everything, that nobody cares about earnings anymore. So, yeah, that's about it. Good luck with whatever you're trading this week. Manage your risk. Or if you're just taking a break from trading for the summer and enjoying vacation, then have fun with that too. But yeah, that's all from me. And I'll talk to you guys next week. Bye.